So, okay, everyone, we're going to be going over what has been the rise of BRICS over the past 4 years. We've seen China really push this with Russia, India, Brazil, South Africa. We've seen more nations want to join. We're seeing, and I'll go over in a moment, how China has been directly trying to weaken the US dollar. The US was seen as weak under the Biden administration, but now that Trump is back in office, he is going to try to put America first, make the US dollar great again. And there's a lot of optimism in the US right now that hopefully they can de-escalate a lot of the conflicts that are going on around the world right now and put American interests first before other countries. And a lot of the BRICS nations are struggling with this surge in the US dollar, and it is going to make a foreign debt crisis. So first things first, let's go over what China has been doing, what Donald Trump has said he will do, and some recent things that has been happening in the markets, like Brazil, like their currency crashing, and a lot of other currencies, like the Russian currency, crashing as well. So China is dumping US treasuries and buying gold. So this is something that we've been seeing happen over the past four years, but it has accelerated over the past couple of years. So as Chinese accumulate more and more gold, they're dumping US treasuries. Now, China is the second biggest holder of US treasuries in the world. Japan is number one, but they have been dumping their US treasuries, trying to weaken the dollar and strengthen the Chinese yuan. So China offloaded another $22 billion in US treasuries in February, according to the latest data from the Federal Reserve, but I've got more updated data recently. And China still ranks as the second holder. As I said, Japan is number one, and China has been divesting itself from US debt for several years. So we can see they were a big holder of US treasuries in 2010, 2012, 2014, but according to this chart here, they've been rapidly selling off US treasuries. Now, this is a big problem because normally this wouldn't be an issue because the Federal Reserve has been doing something called quantitative easing, where they've been buying US treasuries. I'll move myself here so you can see the chart. But as of June 2022, they started dumping US treasuries, and they've sold off about $2 trillion worth of assets off their balance sheet, not just US treasuries, but also mortgage-backed securities. And this has led to interest rates recently rising on the 10-year US Treasury, even though the Federal Reserve has been cutting interest rates. So China is intentionally minimizing exposure to the dollar. Chinese policymakers have seen how the US uses the dollar as a foreign policy weapon. Last month, Janet Yellen floated the idea of seizing Russian frozen dollar-denominated assets and giving them to Ukraine. The Chinese aren't dumb. They realize the US could put the same kind of squeeze on them. So if you recognize something that makes you vulnerable, what do? Well, you minimize the vulnerability, and that's what they're doing. If you are concerned about that, the US could pull the dollar rug out from under you. Why not pull out the dollar system first? Now, this is something that they have been successfully doing, but it's now made a huge U-turn. So this is China's strategy. The Chinese are stockpiling gold as a reserve asset that carries no counterparty risk at all. So that's right. No matter what currency fails, gold will always hold value. The People's Bank of China has added gold to its reserve for 16 straight months, adding over 300 tons of gold to its stash since it resumed reporting gold purchases in October 2022. And I think the real amount of gold they have is much, much higher. So China may hold far more gold than official reports, as Jim Rickards pointed out in his Day of Reckoning report back in 2015. So here's a big problem for the US Treasury. The federal government is running massive deficits month after month, and if China and other currencies spurn US debt, who is going to fund this borrowing spree? Because again, the Federal Reserve is not buying, and a lot of other major countries like Japan and China are starting to dump US Treasuries. So foreign investors make up a third of the market for US Treasuries, and you could argue that there's still plenty of capacity in the domestic market. The problem is the largest domestic US bondholder is also out of the market, the Federal Reserve, like I was talking about. So the problem is the Fed's out of the market. The central bank is allowing US Treasuries to roll off its balance sheet with coordinated tightening, a policy meant to push down the price of inflation. But unfortunately, we've seen inflation has picked up recently. So the biggest player in the domestic treasury market and the second largest player in the foreign treasury market are selling bonds. Who is going to absorb them? All along with the new debt issued by the US Treasury month after month. That's right, and that's why the US government, Trump administration, along with Doge, needs to massively cut spending, because if they keep on going down this debt spree, eventually people are going to lose faith in if they can pay it back or not. So this is one of the reasons Treasury yields continue to climb despite hopes of Federal Reserve rate cuts. That's a big problem given the US government has shelled out $522 billion on interest payments just halfway through the fiscal year of 2024, and that's now much higher. That's a 35.9% increase over the same period in 2023. So that is what China has been doing to try to weaken the US dollar. And we've got more recent news. China ramps up de-dollarization efforts by dumping a record amount of US bonds. So China sold a record 53.3 billion worth of treasuries and agency bonds in the first quarter, Bloomberg reported. It previously unloaded US debt to prop up its yuan, which has again grown weak against a rallying dollar. And the country is piling into gold, which now makes up its highest share of its reserves since 2015. So this is what China has been trying to do, because it's increasingly intensifying US economic sanctions targeting Russia's financial system, has deepened concerns in China over its extensive dollar asset holdings and Chinese financial system's reliance on the dollar. But Donald Trump has come out and given a big warning. He's threatened BRICS nations with 100% tariffs if they seek to dethrone the dollar. And this has sent chills down their spines. A lot of investors are getting more optimistic with the US and less optimistic with the BRICS nations. So his threat on Saturday was directed as the so-called BRICS group, which is a coalition of non-Western countries that include major world leaders such as Russia and China. Writing on social media, Trump demanded a commitment from group members that they would not move away from US dollars. And I've got some data here to back up the US dollar strengthening. We require a commitment from these countries that they will neither create a new BRIC currency nor back any other currency to replace the mighty dollar. So he socialed here and tweeted here, the idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. So yes, a lot of countries have been moving away from the dollar, have been taking the US seriously, and now he's saying enough is enough. We require a commitment from these countries that they would neither create a new big currency nor back any other currency to play the dollar, or they'll face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker. There is no chance that the BRICS will replace the US dollar in international trade, and any country that tries to should wave goodbye to America. So he's coming out swinging, holding no punches here, Trump, even before he's in office. So the statement came in the wake of BRICS summit in Kazan, Russia, where developing countries discuss boosting non-dollar transactions and strengthening local currencies. But whether the group could dethrone the US dollar, which has been the world's most used currency since the end of World War II, is still up in the air. So here is a look at the BRICS group once and how it's challenging the world's reliance on the US currency. Now, I do have some data as well to show that China's yuan is strengthening as well. So it's an informal group of 9 countries which want emerging economies to have more influence on international politics. So we all know it's Brazil, Russia, India, and China, and that started around 2009, 2010. So Egypt, Ethiopia, Iran, and United Arab Emirates have since also become members. So the head of state and governments of these currencies convene annually, with members taking it in turns to serve as chairman of the group each year. So why does BRICS matter? Well, together the group accounts for more than 37% of the global economy and some 40% of the world's population. So BRICS members nations include some of the largest importers of oil, China and India, and some of the largest exporters of it, Russia and the UAE. So after their first summit in Russia 15 years ago, BRICS countries released a joint statement saying emerging and developing economies must have a greater voice and representation in the international financial institutions. And, it seems fair that, they need to diversify the global economy, but these countries are not acting in the US best interests, and Trump knows this. So the group sees BRICS as an alternative to global bodies that it argues are dominated by Western powers, such as the World Bank and International Monetary Fund. And that is true, and not a big fan of the IMF either. In 2014, BRICS members set up their own new development bank to lend money to developing countries to boost their infrastructure and sustainability. Now, China has been caught pretty much doing shark loans to a lot of nations, giving them loans and then stealing a lot of their property. They hope that the alternative lending institutions can increase cooperation between emerging economies and reduce dependence on Western-led funding sources. So over the years, members of the groups have also pursued policies to reduce their reliance on US dollars, with Russia, for example, de-dollarizing its reserves and trade after being heavily sanctioned in 2022. So the big question, can the BRICS really drop the US dollar, or how is it going? Well, the findings report of the Dollar Dominance Monitor project said the dollar's role as a primary global reserve currency was secure in the near and medium term, and that is true, but they cannot get complacent because all global currencies eventually fail. The US currency represents roughly 58% of the world's foreign exchange reserves, according to the IMF, and major commodities such as oil are still primarily bought and sold in US dollars. But we have seen China is trying to do deals with Saudi Arabia to buy oil in the yuan. The Atlantic Council report also points out BRICS members have turned their attention away from a shared currency and toward new cross-border payment systems with the goal of creating a more diverse financial network. And the dollar continues its dominance in foreign reserve holdings, trade invoicing, and currency transactions globally. So, however, the study identified that the BRICS group is a potential challenge to the dollar status because of its members' intent to trade more in national currencies because of their growing share of the global economy. So that's right, BRICS has been getting stronger, and Trump knows this, and they know they need to do something now before they keep on getting even stronger. So among the BRICS currencies, Chinese renminbi has the greatest potential for competing with the dollar as a trade and reserve currency. And I'll get into that chart in a moment with its growing strength. That's because China has been able to expand the use of its alternative cross-border payment system known as CIPS, which is a renminbi settlement mechanism that was built to rival the global bank messaging network SWIFT. So the SWIFT system, which mostly involves movements of the dollar, is still by far the dominant player with more than 11,000 connected banks. So, this could be why the US has been trying to go to war, because the banking elites do not want their SWIFT system to be overtaken. Meanwhile, negotiations around an intra-BRICS payment system are still in early stages. The reports note members have reached bilateral agreements one with another. These agreements are likely difficult to scale due to regulatory and liquidity issues, but many form the basics for a currency exchange platform over time. So this is what BRICS has been trying to do, but again, I'll go into how it is now starting to backfire with Trump coming in office and putting in American first policy. So look at this latest report. This has come out very recently. So intervention to halt dollar merely gives its legs. So the US dollar's latest surge has forced central banks around the world to lean against it, selling greenback reserves to stabilize local currencies, but potentially exaggerating the dollar's strength into the bargain and sowing problems down the line. So if hard cash reserves typically banked in US debt are run down sharply, it may just aggravate treasury yields higher at margins and bolster one of the main reasons for the dollar's strength in the process. So until tightening treasury yields eventually force foreign capital out of exceptional US markets at large, the process could spiral from here. So interest rates are going up, people earning more interest on dollar-denominated debt, and that's causing more people to invest. So it is creating a double whammy there for these nations trying to sell off the US dollar and US treasuries. So the Federal Reserve hawkish cut on Wednesday provide the latest spur to the greenback by forcing markets to rethink the rate horizon next year and suspect the Fed's new 4.38% policy rate may now not get back below 4% in the current cycle. So as US Treasury yields climb on both that hawkish message and higher Fed inflation forecasts, the dollar went with them, showing many major emerging markets still dependent on significant dollar funding and fearful of promised tariff hikes from a Donald Trump White House. So that's right. A lot of people are very, very worried and uncertain on what's really going to happen, if these tariffs are going to have a huge impact or not much of an impact at all on inflation. So the Fed's own broad trade-weighted dollar index, up almost 40% over the past decade, is again stalking the record highs set in 2022, with inflation-adjusted real index less than 2% from all-time highs. So the dollar is very, very strong right now. So latest twists have proven painful for many emerging economies, particularly with many coping with both looming trade threats and domestic crises. So that's right. We're going to talk about Brazil. Brazil is a big standout. We can see here, Brazil takes extraordinary measures to fight currency drop, and Brazil is part of BRICS. So Brazil took extraordinary measures Tuesday to stem a collapse in its currency that's quickened in recent weeks amid investor fears of soaring budget deficits in the latest series of aggressive moves. The central bank sold over $3 billion in local markets by the way of back-to-back auctions, its fourth intervention in 3 days. So the maneuver halted a sharp sell-off that's pushed the real down more than 20% this year to a record low, the most among major currencies, and a weakness that's engulfed its, however, spreading across other assets, with Brazil government dollar bonds leading losses in emerging markets. So the president last month unveiled a new income tax breaks, along with a plan to cut $11.5 billion in spending. Traders, however, didn't like his apparent interest in also boosting economic growth. Meanwhile, key piece of its spending cut plan is set to be watered down over concerns that its changes to a social program will hurt the poor. And lawmakers are seeking changes to the legislation in order to maintain financial protections for needy families. So we can see here, Brazil is in big, big trouble here. But it's not just Brazil. And again, so it's forced its central bank to intervene in the open market and sold $5 billion in surprise second auction on Thursday, the largest of its kind since the Brazilian currency floated in 1999. The central bank has now held 6 spot interventions since last week, selling $13.75 billion in addition to $3 auctions, which with repurchase agreements of $7 billion. So emerging markets in trouble, and now China capital markets outflow hit record in November after Trump election win. So China is now seeing a lot of foreign investors flee as well. So China's portfolio investment outflows reached $45.7 billion in November, and Trump's election win roils global flows and yuan slumps. So outflows reflects weak investor confidence despite Beijing stimulus splits. So China is in big trouble here. We can see here cross-border receipts from portfolio investments were $188.9 billion, while payments totaled $234 billion, resulting in the biggest monthly deficit on record, according to data from Chinese foreign exchange regulator. Now we can see here, data release comes as China's policy-driven stock market rally that started in late September is losing steam, while the yuan has slumped against the dollar in the face of tariff threats from Donald Trump. So the massive deficit, which widened from $25.8 billion outflow in October, also reflects weakening investor confidence despite a slew of policies announced by Beijing since late September to stimulate an economy mired in a property crisis, weaken consumption, and persistent deflation. That's right. China is facing deflation from their weakened economy, while the rest of the world is facing inflationary pressures. Now, this is the latest report that shows the dollar's share of global payments surged to 49.1%. So in a rapidly evolving global payments landscape, the dominance of the dollar remains resilient even as new contenders emerge. According to recent data from SWIFT, the dollar's share of global payments has surged to 49.1% as of August 2024, a 12-year high. Now, this has all happened after the recent bullishness from Trump's election win. We can see it's only really started to surge from late 2024. So this comes amid growing calls from BRICS nation for de-dollarization as they aim to reduce reliance on the USD, particularly in commodity-based transactions. However, data suggests that despite these efforts, the greenback's position as a world reserve currency remains largely unshaken. So I'll go ahead and show you this chart here for you to see for yourself. So the increase in US dollar usage for international transactions is striking, especially considering the steady push from BRICS countries, Brazil, Russia, India, and China, and South Africa, to establish alternative payments. Now, one thing we can see here, the Chinese yuan renminbi is increasing its dominance, or is taking more market share, should I say. So these nations collectively represent nearly 45% of the world's population and have taken steps to link their banks and create frameworks to facilitate cross-border payments in local currencies. So despite these initiatives, the dollar's shares jumped by 9% over the last 2 years, underscoring its continued importance in global finance. Now, we'll just say this doesn't mean that the war's over. The US dollar might have won the battle, but the war is still going on and they can't become complacent. But I think with Donald Trump putting the US first, we will see more US dollar dominance, especially if more countries continue to struggle with their debt and their currencies fall, meaning they have to print more of their currency to repay the debt that's in dollars, and it creates this self-fulfilling prophecy. So interestingly, this rise in the dollar dominance coincides with the drastic drop in euro share of global payments, which fell 39% to 21% over the same period, the lowest in over a decade. So we can see this. The US dollar is strengthening, but the euro is absolutely tanking because we can see everything that's happening in Europe right now. Their governments are collapsing. We can see immigration has destroyed a lot of the current countries there. They're losing a lot of their culture and they're failing rapidly. They've got huge debt and a lot of people know this. So once a strong rival to the US dollar, the euro's decline has raised questions among analysts and policymakers alike. So he notes that the dollar's dominance remains undisputed amid the BRICS de-dollarization agenda, and the euro's fall signals a significant shift in the global financial landscape. So what is some factors that's fueling the US dollar dominance? Well, several factors contribute to the dollar's sustained dominance. The Federal Reserve's aggressive monetary policy, including a cycle of interest rate hikes from near 0 to 5.5% over 16 months, have strengthened the dollar's position. So that's right. Investors are getting paid more interest on their dollars, and the dollar is seen as a safe haven during these geopolitical uncertainties right now. And so people are parking their money in the US dollar and getting paid interest while they figure out what's really going to happen. So as inflation in the US drops to 2.4%, which we all know is much higher than that, the economic environment has become more stable, making the US dollar an attractive choice for global trade settlements. Now, while we all know that it is much higher than that, other countries like Russia is facing much higher inflation. Their official numbers are around 8.9%. When we probably look on the ground, the real numbers are more like 30%. While BRICS efforts towards dollar de-dollarization are notable, they face challenges in achieving widespread adoption. So many countries, particularly developing ones, continue to rely on the stability and liquidity that the US dollar provides, particularly during economic turbulence. And that's what we're going to be facing very, very soon. So this reliance makes it difficult for BRICS to promote local currencies in a global trade, especially as these currencies lack the robustness needed to withstand market volatility. And go ahead and what do you guys think about this? Drop it in the chat below. So the only currency that has managed to gain traction, like I was showing in this chart before, is the yuan, which has seen its share of global payments rise from 2% in 2023 to nearly 5% in 2025. So while it's not a big market share now, it's more than doubled that by doing what we went over earlier in the video of dumping US Treasuries, the Federal Reserve dumping US Treasuries, and the China ramps up efforts to de-dollarize by dumping record amount of US bonds and US dollars. So we'll go back to this report here. So the yuan has now maintained a share above 4% for 9 consecutive months, securing its position as the 4th most used currency in global payments landscape. And you can see they're trying to work into the oil markets with having their payment system used to buy oil from Saudi Arabia. So China's efforts are part of a large ambition to reduce the influence of the US dollar and reshape the international monetary system. And this is why China and the US are about to get in a big trade war. However, despite these advances, the yuan limited convertibility and closed nature of China's financial system continues to pose significant barriers. That's right. We're seeing a lot of foreign capital flight, like I went over earlier in the video. A lot of people don't trust China, and that's going to be their biggest challenge. So while the yuan is growing, it remains far from overtaking the US dollar's position in global payments. But again, we can't become complacent. So there you have it. The US dollar is making a huge comeback under Donald Trump after he's, threatened the BRICS nations. He's going to put America first. A lot of these BRIC countries like Brazil are facing huge issues with their currency. As their currencies drop, they need to print more of their currency to pay back the US dollar debt. And this is going to create a self-fulfilling prophecy of a foreign debt crisis. So what do you all think about this? Let me know down below. You're awesome. I'll see you all in the next video.